Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, November the 10th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that all comes to impact the markets with some of my market analysis. And I do the same thing for you folks out there, except I'm going to go a little bit further in these market commentaries and talk about some option strategies that I'm implementing into my portfolio based on guidelines I've set out for you all to implement options into our portfolio based on any given assumption. We don't just pick option strategies out of a hat. I have specific guidelines to help streamline your process in finding the best strategy for any given assumption. So please check those out at protraderstrategies.com. All right, so without further ado, let's talk about the economic data. Across the pond, not really a whole lot going on. We did get French industrial production coming in at 1.4%, better than the 0.8% that was expected. But Italian industrial production fell flat on its face at negative 5.6, expected to be a negative 1.9. Now, Italy isn't really a big, huge industrial aspect of Europe, but just a bit of a fall on the face. And Germany, as it is, the ZEW economic sentiment in Germany really fell off precipitously from 39, or fell off to 39. All right, so fell off from 45 to 39 reading. Okay, sorry about the confusion there, but that is one of the lower readings we've seen since the pandemic really began. So it looked like it was starting to come back a little bit there for a while, but not so much anymore. All right, the NFIB, which is the National Federation of Independent Businesses, it's a small business index coming in at 104, expected to be 104.3, so we'll say that's in line there. And JOLTS job openings coming in at 6,440,000, expected to be 6.5 million. Slightly lower than what was expected there, but I don't think it's a major ordeal there. Mortgage delinquencies coming in at 7.65%. That's lower than what we were seeing just a month ago, which was in the 8 handle there. And the tip business optimism coming in at 50, expected to be 56. Now, that is not something we were hoping to see there, because 50 is that line of delineation, kind of like what we see with the PMI. Anything above 50 is expansion, anything below 50 is contraction. Well, last month we did get a 55 reading. It was slightly better than expected there again. So I think we were expecting that trajectory on the economic business optimism to kind of keep working out. Well, it didn't so much last month, and we just hovering above expansion with that number there. And we have a couple Fed governors speaking later on today, Quarles and Bernard. All right, so let's talk about the overall markets. Continuing to move higher here is the gold futures. Or sorry, gold futures are not moving higher. Crude oil, that's on the expectations that we're going to be coming out of this. Now, some things we've also been seeing here is another round of lockdowns here in the United States and across the pond. So that's going to seriously impact crude oil and how its demand is going to start weighing. Now, gold futures are moving back today, finding a bit of support at that area I was talking about. I thought we'd find some support around that 1850 area. That seems to have held. We did test it, but are bouncing up and away from that. The idea here is the stimulus package is probably still going to happen. And I talked to you all yesterday saying that probably an opportunity to get into gold if you are a gold bug or are bullish. This would be the time to probably start playing that. I haven't added anything to my portfolio in gold at this point. Bonds are moving slightly higher, although off of the highs of the session, as you can see here, where we are nearing the lows there. But bonds, I think, just are well overdone to the downside, y'all. I think that this market is just really selling off, and it's basically a lack of really any information coming out of the Fed as to what they are going to do. Now, we talked about yesterday, they are coming in and buying bonds. They are kind of trying to support this. They want to lift the market, lower interest rates. They don't want interest rates to fly up too fast, especially when we are maybe looking at another round of coronavirus lockdowns. That would slow the economy, and with higher interest rates, that would be detrimental at that type of pivot or that type of breaking point. Now the VIX, we are starting to get a bit of a move higher here in the VIX off of the lows anyway. And that's because we've got a bit of a big mixed bag. The blue chips continuing to do well, up another 154 points today. Yesterday, though, it was a really weird thing where we saw those markets really rally off of the Pfizer news that they had come up with a vaccine that looked like it was a very good contender for being the vaccine going forward with a 90%. I can't ever say it on film, but 90% effective. Well, later on throughout the day, the market started selling off as that might have been a little bit overhyped at that point. NASDAQ continuing to be the weakness, as if it is a more of a stay-at-home trade here, being the tech sector, where the rest of them are going to be more of a reopening. And the thought here going forward is that if we do have a vaccine that is as good as what it looks like Pfizer has on the docket, then the stay-at-home trade isn't going to do as well, and some of these other laggers are going to do well moving forward. So NASDAQ is going to suffer a little bit, but we saw them make the biggest moves to the upside. Now, E-mini S&P, something I really want to note here is this chart does not look good, normally speaking, when you get the blast off to the upside here in the market where we got yesterday's candle. That candle looks like a topping pattern to me. And if the market settles at or near the lows, that is going to look like a confirmation rollover there, okay? So we're going to have to keep an eye on this. Keep in mind that overnight trade isn't really all that widely looked at, I guess. A lot of people like to discount that overnight spike there. So we're going to have to keep an eye on it. But at the end of the day, this chart pattern to me looks a little bit bearish. Yeah, some people could say that you got counter-opposing dojis here, right there and there, which makes that more of a continuation pattern. But a settlement, with this candle turning red like that would really make it look like the market wants to start to roll back over towards the point of control if we get this as a confirmation today. All right, so keep your eyes out for that later on trading. That's what we're going to be keeping our eyes open for. All right, you can see overnight, or yesterday's trade, we were talking about this. I started talking about right here. We did consolidate for a little bit, but then the market just fell off towards the end of the day. Today, pretty quiet. Lack of a crystal ball is really what's hindering the markets at this point in time, and kind of a lot of spinning plates going on in the markets right now. I've chosen to kind of sit on my hands at this point and start to look to maybe cover some of the trades I've got going on. So IBM is one of them. Now, you guys remember I've gotten long IBM off of selling some puts, and the market has pretty much trended sideways since the earnings trade where I had this stock put to me. And what I've done in that meantime, kind of like what we just talked about with Coca-Cola yesterday, right, is staying mechanical with these trades that we've taken into our account and or just in an overall portfolio. And something like IBM, which is one of the things that got me into trading options, is how IBM has a tendency to really, it has some moves, but it really trends sideways. And there's just, it's just kind of a placeholder of money in a sense. So the best thing to do from my perspective is with something like IBM, go in there and continuously lower your cost basis on it. I've gotten put this stock at 120, but have continued to lower overall cost basis on this trade. In IBM, you can see that we're well below that 120 area. It has made some spikes up and above, but it has never gotten called away from me. So in that meantime, what I've done is gone in there and started trading different options around it. And I legged into a strangle around my 120 longs in IBM. By doing that, I sold the 105 puts in there for $1. And then I also sold the 120 calls in there for $1. Now, you can see the market's traded up. It's trading around 117, right? So it might get called away from me. To be honest, I'd be happy for it to be called away from me. I'll reallocate that money elsewhere. But if it doesn't, I'm going to continue to lower cost basis on it. So today, with the markets moving the way that they are, I've been able to cover my puts. So the 105 puts, I sold for $1. I bought back for 10 cents this morning. And I've left on those calls. If we rally up and trade above 120, I'll let them take them away from me at 120. I've done a great job here lowering my overall cost basis on this trade. It is a profitable trade at this point. It's well over $3. And if it gets called away from me, I might just as well go in there and start selling some puts at good strike locations. And if it goes down there and I get put the stock again, I'll start doing the same thing. Start covering that trade, do cover calls, do a strangle around it, all of those things, lower overall cost basis, and continue to get an extra dividend out of my option strategies. All right, so that's all I've got for you guys. That's the only thing I've done today. I'm not adding anything. I want to kind of wait to see how the overall market shakes out today before moving on. And we also need to take a moment to go over our disclaimer here, as we're an educational company and there are risks to trading. All right, so that's all I got for you, other than if you can't take that, take it easy.